it's just a simpler form of the Schedule C.
I think whatever you start inputting on, this is tax layer, we don't have like all of the capabilities, I guess, just yet. But once you just answer the questionnaire, it will decide for you, like Schedule C easy or Schedule C. But that's why we're kind of like doing a big picture approach, because I'm just talking forms right now, but just to get familiar about what to expect on these forms, so when you actually input the questions, you'll kind of know where to see it form-wise. But from what Kyla said, and I'll take your word for it, it's kind of foolproof, right? Tax layer, you kind of just input items in from your source documents. But I think we're pretty good with Schedule C's. Yeah. So I'll just go back to the 1040. I think we just pretty much accomplished the income portion, the forms. But some adjustments on your AGI that you'd probably see a lot. If you have teachers, they can claim up to like $250 as an adjustment to their income. And if they're married, if you have like 2 married teachers, it's up to like $500. So you can see that. I've seen that a couple of times. 23, yeah, educator expenses. So if they pay for decorations or something around the classroom or anything they need for their students, that would count. And again, just kind of remind them, make sure you have all the receipts in case you do get like audited or the IRS asks for something, but it's capped anyways at $250 per teacher. Yeah.
If they itemize too, I think they could do it on their Schedule A.
I'm just gonna go like unreimbursed employee expenses or something like that. Again, yeah, if they do have enough to itemize, then they can get that benefit. Let's see. Some living expenses, I don't think I've seen a lot. Withdrawal, alimony paid, so like that would be the mirror of the alimony received. So if you have someone who paid alimony to someone else, they are able to take that as a deduction from their income. So that would be subtracted out. And then student loan interest deduction. So maybe some of your students, they're already like gonna graduate, or they, I don't know, you'll have some people that have already graduated and they paid their student loan and stuff throughout the year. And I think they should have, yeah.
Yeah, I'm already paying out the interest on my loans, so it's actually
A deduction. Yeah, so you can get that as an adjustment to your income. I think they should have like a form that they send you to, so that should be able to report on some sort of line there. That's the deduction. Deduction fees. Not much else going on your AGI. I don't see very much on here though. Did you guys have any questions on AGI? Yeah.
So I think a good thing to keep in mind would be like, you know, like there's subsidized loans and unsubsidized loans.
Mm-hmm.
And the unsubsidized, you accumulate interest as soon as you take out the loan. So the interest on those loans, like students will be able to deduct that, right?
Yes.
Even though they haven't graduated yet.
Right. I mean,
And
they,
the loan isn't due.
I think don't you have to have been paying those loans, right? So don't.
Well, for the unsubsidized, it's not, the government's not paying the interest. The subsidized, the government's paying the interest while you're in school.
Right.
Yeah, I imagine you can.
Okay. Have you seen a lot of subsidized stuff?
No, I haven't done VITA yet, but.
Yeah. I think I've seen it, yeah.
Yeah, I think last year I was doing a return and he logged into his like thing and he hadn't been making payments, but there was interest on it, but there was like nothing that he could do from there because he wasn't making payments on the loan.
Yeah.
That's what, yeah.
Oh, so you do have to?
So that's what I was saying, like, you have this interest accumulating, but you haven't, if you think about like economically, you didn't put out the money yet to pay. So if you are going to take the deduction, you're gonna maybe pay this loan off like later, right? Maybe once you graduate, like you've actually put money out, and that's when I would deduct it. Because then say if you're taking the deduction now, but you literally pay in like 2020 and you get a form from the government saying like, hey, you paid this interest, that's technically when you should be doing it, you know, because just thinking like economically, that's when you put your money out to pay interest for this loan.
Can you think principal loan or just like?
It's interest.
Just interest?
Yeah, they should have an actual form where it says how much you can add to the deduction because it's how much interest they've been paying.
Exactly.
And that's easy for the people who are like alumni or the parents who have been paying for it.
Yeah, the reason why like I bring this up is because since I graduated in 2015, and then I've been paying those loans ever since, and I think I have to like log on and get that statement that says how much I've paid for the whole like, year. This probably won't apply to some of the people there, but there are like AGI limitations, so if you make over a certain amount, you can't get this deduction anymore, the student loan interest deduction. But yes, they should have like a statement saying, for 2016, I paid this loan, these loan amounts, this part is related to the interest for these loans.
Yeah, the 1098E.
1098E?
Mhm.
Okay. I know there's like several forms, 1098T, 1098E, but for the student loan interest, 1098E.
Yeah. And then the T is for the tuition.
Tuition. Okay. And then we kind of went over, after that you have your AGI. And again, the greater of your itemized deductions or your standard deduction. So 6,300 for example for single. Exemptions. Let's see. I think if you have dependents, you had to bring their social security cards too for the kids, right? So again, also make sure if they are claiming people, like claiming children, and they have their SSNs on them, like actually have them on them, like have them recited. Just because they have their own, but they don't have their children's, they need their children's SSNs as well. So after all of that, then you get your taxable income, and all of this should be calculated by TaxSlayer, and then your tax, and then alternate minimum tax doesn't apply to us. That's only if you really have a lot of deductions like itemized, kind of like richer. Let's see. We'll talk a little bit more about this premium tax credit. It's related to like the healthcare stuff. If you've had health coverage throughout the year and you had to make payments, or if you've had credits paid to you or to your insurance company, we'll talk about that. But just know that this premium tax credit is a reduction of your tax liability. So if you have low-income families and they have this like 1095 or the 1095A, I think. They should be receiving either 95A, B, C, because some of them are either from their employers or they bought directly from the marketplace. Insurance. So you should be asking about this type of statement. I think they should be receiving it in January, like late January. I think employers are starting to have them give it out sooner. So if they do come and they say they don't have it yet, I would kind of advise them to come back once they have it available, because it has all the information that you need to fill out the forms. I wouldn't go off of whatever they tell you really. Like again, like the W-2, it's reported to the government, so I would match whatever's on here. So just keep that in mind. Let's see. I've seen a lot of this line item as well, number 49. So if you have a family or parents, single moms, I've seen this a lot, and they go to work. And so if they go to work, their kids need to be like taken care of either with like a nanny or a daycare. They're able to get a credit for child independent care expenses. So if they paid like money to an institution or something like that, they can get a credit to reduce their taxes. But you'll need some information from them. It's not necessarily like a form. Oh yeah.
I think there's like a flow chart in our 4012, but
There's a decision
a
tree.
decision tree, yeah.
Oh, okay. Yeah, okay. Because you guys have seen this credit, right? Like people would come in or no?
When I did it last year, I didn't see it a lot, but we had a procedure of like, do they have this and this and this? So I was like, no, yes. I don't know what page it is, but it should be in your 4012.
4012.
Yeah.
Okay. What this essentially does is like I said, reduces tax. But if they do come in and say like, hey, I went to work during the year and I pay like this nanny, can I get some sort of benefit from it? Because I had to go to work. I think as long as they have their EIN or their SSN, that's what's going to be reported on this form and how much they paid to this institution or person for them to take care of their kids while they go to them. Let's see, education credits. So the American Opportunity Credit. What else was there? I think that took the place of the whole credit. We'll talk about those.
It's like lifetime learning or something
Lifetime
like that.
learning. Because I think the opportunity credit is only good for the first 4 years of college. Right?
I think lifetime learning, you have to be over 25 to take the credit though.
Over 25.
Over 25, and if you're still in school for more than 4 years, I think.
And I think there's something about like expenses, like the
Yeah.
books have to be
Purchased from the
purchased
actual
from the
school.
institution school, right? Because I think for the American Opportunity Credit, as long as you just purchase them and it's required for school. I've seen students that are like, hey, I had to buy this Mac laptop and I want to claim it. And, well, I don't think you
You can, because you
can't
use
do
up
that.
for personal use.
That's a personal thing. You can claim the books, tuition as expenses,
iClickers.
iClicker.
What about parking permits?
No, because it's not like a required expense. The same thing as room and board. Like you don't have, not all the students are required to have room and board. It's some for you, right? So let's see.
So like lab equipment for like people who have science.
Yes. So if it's required for those science classes, if you have to buy certain things, that would count. So if they have those receipts or records of that, they can do that. Let's see. So I need to write those down, make sure we would talk about the premium tax credit and the education ones, because those are oh yeah.
There's like specific like child credits that if the parents are like separated, we need to make sure that the other parent didn't claim that credit on their tax return. Like, I think we had to clarify that happened, just to make sure that like the other parent didn't take that credit from the other person, even though the other person was supposed to claim it. I think we try to make that distinction. Like, same thing with like clarifying if someone's claiming you as a dependent, like making sure that the other person didn't claim that credit on their return.
So-
I forgot which credit it was though.
Would these people be filing separately though, or were they still joined, or was this
I think it was like separate. Like only the person who had more time with the child was able to claim the credit. The other person couldn't. I forgot which one it was.
That's interesting, because then how would we file them if they're married but separately? We're not allowed to.
I don't remember what it was, but I remember we went over it on our last training last year.
Okay, I think if they were maybe head of household and they had a dependent, and maybe someone else was kind of trying to defend them, then I would agree. Only the one who's probably spent more time with them throughout the year would be able to claim those credits. And that again is probably something to ask your client during the interview sheet if they were spending time or their child was spending more time with someone, and to double check if they already took the credit on their tax return, because you can't double take the credit, right? Okay. So after you get all of those tax credits that reduce your tax liability, we have additional taxes that would be added on. So if they had self-employment tax, additional tax on like retirement plans. Have you seen a lot of that, Carla? Sometimes, yeah. This line 61, so like we mentioned before, if they did not, or if they did, let's go with if they did. If they did have coverage throughout the whole year, you should check this box. This would probably be a question anyways on TaxSlayer. If they had full coverage, there would be a checkbox for that. If they didn't, and no, exemption applies, there would be a penalty. In this case, in the form of a tax, saying, hey, since you didn't have health insurance and you should have, then we're going to tack on an additional tax on top of your calculated tax liability. So that would be on line 61. This should all be calculated anyways. So like I said, you will have these tax forms in 1095A from the marketplace that shows if they had coverage or not. And scrolling down, so now it's the payment section. So we said, okay, we have income. We had AGI, all your deductions to your income items. Then we had your exemptions, taxable income, tax, if you had some tax credits to reduce your tax, if you have items that increase your tax, and now we get to the final total of 63, your total tax, right? So in your payment section, most of the time I would just see W-2 withholdings, like from your job, and from 1099, like miscellaneous or something like that. Withholdings throughout the year from estimates, I don't think you'd maybe see from clients here, but mostly 64 is what you'd see a lot of. An additional child tax credit, I think I would see that too.
The earned income credit.
Yeah, especially earned income credit. There are rules on those. Might want to check a little bit in your book, but basically they can't earn this unless they're like a certain age, I believe. Like we had students trying to claim it, but if you're under 24 or something, they cannot earn this credit. They cannot use this credit as a payment. And it's like the name says, it has to be earned income to use this credit. So if they didn't work, they can't claim this credit. You have to have had a W-2 or a job throughout the year to get this credit. So what the government says is, hey, you made, a certain amount on your threshold, we're gonna give you a credit back. That's all it really is. Like, you made under a certain amount, we'll give you a payment, like a freebie, I guess you can call it. So I would kind of just check on in your book for the limits, but if they are eligible, you would see it on line 66A as part of payments that apply to your tax.
So question?
Yeah.
How can we calculate the earning income?
I'm sorry?
How can we calculate the earning income?
Well, that should already calculate from when you're inputting your W-2s. So there shouldn't be too much think work on calculating these things because they should be inputting on the questionnaire. When you're filling stuff out, I don't want you to be like, is this, I just want you to be able to kind of know, okay, if they're under a certain income threshold and they had a W-2, should I be seeing an earned income credit? And if you preview the return and you see something, you'll know why. So like we talked about earlier, the American Opportunity Credit is it's a refundable credit, right? So if you had excess, if I think it's $2,500 and a portion of that can count as a payment. So I think it's max $1,000 or so, something like that. But if you have a portion that is refundable, you would see it as a payment on this line. Like if you had a lot of expenses throughout the year, then it would show up. Then you have the net premium tax credit, which again is also related to the healthcare coverage stuff, so we'll talk about that, give some slides. But after all your payments, you get to these last lines, whether you have a refund or you have an amount due. So if your payments exceed your total tax liability, you get a refund. And so you should be able to e-file that and they can have it like mailed to them. I'm pretty sure, I think there's like direct deposit that you can put your routing number and account number. I would suggest, because some people had a hard time finding their bank info before, so see if they could have like a voided check, that's where you would see it, or if they want, they could log on to their bank statements and stuff and check online there. So they should be able to provide you with information for the refund. And if they don't, if they do owe, then that means like your tax liability is less than your payments, and they would have to owe, then they would have to pay from like 78. I think that's pretty much on the 1040 before we jump into the actual like credits and stuff. Did you guys have any questions about the 1040?